Here's an awesome 1-minute scalping strategy on the ES futures contracts. Now you can trade this on other things as well, but I'm going to do it on the ES. So we're going to start with a moving average exponential, an EMA. We're also going to add an ATR, average true range, and we're going to modify these slightly. So again, I'm on the 1 minute, I'm on the ES. This is actually looking at Friday, February 7th. I just kind of pulled up that day because that was the most recent full trading day when I'm recording this. So I'm going to do a 21 length EMA. I'm going to change this to white and just make it thicker. I just think it's easier to see it that way. And then for the ATR, I'm going to change it to yellow and make it thicker. And then I'm also going to make it 21. And that's all we're going to need besides this tool right here, which is the we can use our trend lines. You know, there's different tools we can use. I'm going to use the parallel channel. You can use trend lines. I like channels though. So I'm going to use the parallel channel tool. And when you first draw one of these, so I'm just going to draw a basic one here just to show you. When you first draw one, it's going to look a little different. So what you're going to want to do is modify this. So I make these lines a little thicker and I use orange and I have a 0, a 0.5, which I use the dotted thicker line, and then I have a 1. And that just is how I have it set up, and that is my default that I use. So no backgrounds or anything. And that's how we set it up. So basically the way it's going to work here is we're going to start off. This is a news event at 5:30 in the morning Pacific time. So the market opens at around 6:30 a.m. on futures. So what we're going to do is try to draw a trend line from before the market opened based on the swings. So what we can do is go from the lows, and we can draw one like this first. You know, something that tries to fit the price action, something like this maybe. Now that's an overnight with a spike there. So what I'm also going to do is see, this looks like what I would call a spike and channel pattern. And what you do with a spike and channel pattern is you draw your trend line off of the price action where it fits. Now, you would have had this trend line. So if you think about where 630 is, it's right here. Okay, I'll just draw a little. It's right there. That's where 630 is. So just keep that in mind right there. Now, we don't need to keep that drawing on there, but I just wanted to kind of illustrate that. So the point is, as you're coming in, the market always has a spike in volatility after the open. So we have to be aware of that reality, okay? We just have to be aware of it. So anyway, let's take a look and see if we have any trade setups here. So the way that we're going to look at this strategy is, if we are in an up channel, we're looking for longs, and if most of the price action is above the 21 EMA. Now, the ideal here is if we get to take a long trade off of the bottom of the channel or the 21 EMA or both. That's the ideal. The ATR is here to help us measure the volatility. And basically what that is going to do is allow us to have our scalp target for half of the ATR. So the way we're going to look at this is we're going to take a look at our swings here, and we're going to see if we have any sort of setups. So we're going to start to look at, as we're moving down towards the EMA, as we're moving down, are we going to have any possible long trades? Now, this is right after that news volatility. So it came up, we dropped down, and what we're looking for legs of correction and bullish bars. And if we see that, so right here we have a new high, we have a pullback, it tries to go higher once, right? So it comes down, this is all kind of one leg down, and then it tries to go higher, and then we get a second leg, tries to go higher, and then we look to see, do we get a higher low? It's not very bullish, so we're going to stay out. We're just looking. Here's a new high. It pulls back. There's no attempt higher here, so there's no attempt higher. So this is all one leg down. First attempt higher, pull back, second attempt higher, and that's a bullish bar. So that's one where we look for a long position because it's on the second attempt higher. So what we're going to do is we are going to take our order. One tick below the signal bar is our stop loss. And the ATR, if I hover over this candle at the time, was at about a 1.86. So it was actually pretty small. But what I can tell you is if one half the ATR, so that's less than 2 points, if one half the ATR ends up being less than a 2, or sorry, if the ATR is less than a 2, we're just gonna target 4 ticks as our goal. So 4 ticks, which is 1 point. If it goes when the ATR is higher, so like when the ATR is like a 3, we'll go for 6 ticks because that is 1.5 points. It's half the ATR. So the smallest that will go is 4 ticks of profit. And that's what we have here. So we have an order where it goes up 4 ticks, we hit our profit, and then what we do is we can try to catch runners. So after we hit our scalp, we get out, we move our stop loss to break even, and we try to get a runner. Now we would have got stopped on the runner at break even, so no big deal, but that was a nice winning trade. So we'll leave that one on the chart. Okay, so then after that, the open happens. We get a spike up. And right here, we get a pullback, first attempt higher, pullback, still inside the channel, second attempt higher with a bullish bar. Now this is an engulfing bar, so you got to wait for it to close. It's a huge bar, which is going to happen from time to time. So that's just par for the course. But anyway, so you're going to have a bigger stop loss on this one. At the time, though, the ATR was at about a 2.49. So we can actually go for a 1.25. So 1.25 points for our first scalp, which comes at this big bar. So we would have been sitting sideways for a second. We would have hit it. As soon as that hits, our stop loss moves to break even. And this one actually gives us a nice runner. So let's see. So the runner ends up going all the way up. You could have wrote it up as high as you really want. But what I would do is try to target near the highs of the channel, which at the time, the channel would have been probably more like that. So you could have gotten out there 3.5 points, but you could have also just trailed up your stop loss as you went and just kind of maybe trailed behind the midline, something like that. There's a few ways to do it, and then you probably want to get out at some point up here. So I mean, you could have easily got 7 points on that, I think. Even if you just waited for a bearish bar and you just placed your order 1 tick below it, what you could have done there, like if you waited for one of these higher bearish bars, then you would have ended up getting filled there and you would have got 5.5 points on that runner. So that's the way that you can kind of play that. Now, it starts to break down here. You get one leg of correction and then it just dumps. Now, I think there was some kind of a news event, if I remember correctly. So at that point, the trend line is broken, and now we're going to look to see if we can find something else. Now, this was a weird day because you have a spike down, sideways, spike down, and then it's kind of sideways. So while it's sideways, we're not taking any of these types of trades. When it's bouncing above and below the EMA like that, in the sideways action, we're not taking any of these trades. This is a price action trend following strategy. So you can draw a tight channel, but there just isn't really any sort of like true downtrend here that you can really trade off of. So you kind of just have to be patient after that. All right, this is during the regular session, so this would qualify as a downtrend here, or at least some sort of a minor downtrend correction type of thing. So we kind of had this down channel, and yeah, you get a couple of them. These ones aren't perfect, but I'll actually show you this because this is actually really cool. So what we have here is we have a new low. And we're mostly below the EMA, so you're looking for second legs. And you get a couple. You get one up here, but I don't think you'd have a confirmed downtrend yet, so I'm not going to cherry pick anything. I just want to show real ones. Right here, you have a new low, and you have a pullback, first attempt lower, pullback to this big bar, and this is the second attempt lower on this red bar, but it's an inside bar of the green one. So I don't think you'd necessarily want to take that. But after it breaks below and then you get a lower high, you can enter on the lower high because it's still the second attempt and this is just a lower high that gives you a better entry confirmation. So you go short, you can go short 1 tick below the lower high. Stop loss up here. ATR at the time was a 2.89. So you could pretty much go for like a 1.5 on that, and you would have got it. And you would have got a little bit of a runner, not much. It would have eventually stopped you out, I think. Actually, no, you would have got in. So you would have gotten filled, and then you could have rode the runner down. I mean, you could have got another 5 points out of the runner there, because you can see that basically when you look at that, it doesn't come back and stop out the runner. So you would have got a nice little runner on that one. And that's how you play that. There is another one here. So there's a first entry, and then but the problem is the second entry triggers here, and this is all inside this giant bar. So you can't really play that like that. Although you do get this lower high here, so that would qualify as another one. It's kind of a small one, but it does qualify. This would be a lower, let's see, so you could go there, and you would have been fine on that one too. You would have got your fill. I think that the ATR, yeah, so you would have got filled on one of those wicks right there, and that one would have been fine. You wouldn't have got a runner there, but you would have got filled on your scalp, no problem. Now, you would have thought that this was going to go lower, but eventually it ends up correcting. So, and then that's towards the end of the day, so that's probably why. But that's basically how you play this strategy. We're looking for the second attempts with a bearish bar on a uptrend. We're looking for the second attempts on a bullish bar, and that's basically it. The ATR is kind of guiding us to help us figure out what we should do with our take profits and our scalps to make sure that we're not getting too aggressive or overzealous on it. But you can see there's setups like this pretty much every single day. Eventually, I'll make one that shows you what to do if it is a sideways range, because there's trades to be had there too. But for now, I'm going to leave it here and show you that this is a nice, easy, trend following, second entry, price action strategy, 1 minute chart, ES. And you can find these pretty much every day. They're tried and true methods. Sometimes you get a nice long runner. And then basically the idea is that you just get one trade with a runner and you're done for the day. Or you get a couple of small scalps and you're still done for the day. And that's it. So I'll see you in the next one.